In the previous video, I turned this chart into a narrative, a story of what I expect the price movement to be moving forward over the moderately short term, days and weeks. I stated that I expect there to be a dip, again, beyond this $29,000 region, maybe down to this liquidity zone here at 23,000. Okay. Now that is a hypothesis. I don't know for certain it's going to happen. It might not happen. But what I'm going to do is I'm going to corroborate that perspective by looking on a smaller time frame and using a number of tools available to me. And one of those is support and resistance. Support is where the price interacts in a downward trajectory and hits off a liquidity zone and bounces. We can see that here. Okay, we descended rather dramatically on the 19th of May, intersected this liquidity zone here, went all the way down to $30,000 or so, and then the next day actually had an open around about $36,000. So we bounced off that zone. We then retested it, and retests with support zones are actually crucial, and we've bounced off it again. Okay, so effectively what's happening here in terms of narrative is every time the price gets down to this level, buyers are very, very willing to enter the market, and the sellers are losing at these levels. Up here, the sellers have more to play with because there's a lot more people willing to sell out of their assets here and actually have a position liquidated at this level. Okay, down here, very, very few sellers because they've all sold at higher prices. Larger amount of buyers. Okay, we actually see that here. Look at the volume. That volume is huge on that sell, and then we have corroborating buying happening as well. Okay, so these two liquidity zones are key. We could oscillate between these two for a little while as the narrative kind of plays out, but it all depends on what happens at this level. Do we break out here and go and test this next liquidity zone, or do we fail here and test lower once again? Okay. Now there are numerous ways to examine that, and the first one is just to focus in on this time frame here. Okay. Notice also we have a nice mirroring of 3 days of price action where we hesitated before, and then suddenly out of nowhere we were up to this next liquidity zone in 1 day. So it has happened before. However, the sentiment around the market was completely different at this time, and there must have been some kind of bullish news that came out, or there were a lot of people who wanted to enter the market on margin on that day for us to climb rapidly from 39,000 all the way up to 46,000. Okay. And that is something that you can look at for technical analysis. Looking at previous price action is almost as good as viewing live price action because it tells you where traders like to trade. And we are at an impasse at the moment until we get further bullishness. Until we get further bullishness, we will see lower prices. Okay, so let's zoom in here. Let's change this from a day chart into a 4-hour chart. Okay. Now, let's look at this. Okay, so we've got, first and foremost, our descending trend line. Now, descending trend lines, and trend lines in general, all they are support and resistance. Okay, this is support. Okay, so because we are bouncing off it, but in a descending fashion, it is supporting because the price is refusing to go lower in those moments. Okay, if this was a bullish trend line, it would be support, but this is actually acting as support to a falling price, and therefore it is kind of resistance. But resistance and support are really the same thing. It's how they interact with the liquidity zone. Okay, so let's just have a look at that there. Now let's look at the trend channel that we are in. Okay, so there's a nice trend channel. Okay, so we have actually been descending nicely along that trend channel now for a little while. And what's this? A break. Okay. Now, there's an intersection here with a liquidity zone. We are currently oscillating around, but we have started to venture out of this trend channel. Okay. Now, remember, this is a smaller time frame than the day chart that I was looking at, so therefore it's less powerful. Okay, we could very easily start coming down here again and move along this line here, only to break down into this further line again. Okay, and also you can extrapolate these out. Okay, so by extrapolating them out, you can actually work out what would happen if we were to actually drop down to these levels now. Okay, so today, if we were to resume our trajectory of this trend channel, the price could fall all the way to $33,000. Okay, similarly, next week, let's go to the 1st of June, the price could drop all the way down to $25,000 and still be perfectly within this technical analysis narrative. Okay, so let's see what else is going on here in terms of a counter trend. Okay, so this is a counter trend. All right, we're currently on the counter trend itself, not quite aligned up there. Okay, I'm going to change the color of the counter trend to red. Okay, so that it makes a difference. So we're currently oscillating on this level. We're at an impasse here. Okay, a very interesting area where either we break out and see significant highs. Look at this liquidity zone here. Okay, we'll have to get over that before moving higher still to this liquidity zone around this region. Okay, so if we do break here, chances are we're going to see a nice large movement higher, maybe into the mid 40s, $45,000 or so. Okay, now that is a hypothesis, and it doesn't necessarily rule out a further drop beyond this. Okay, we could recover all the way to 45,000 or even 50,000 and still end up coming down to 25,000 in time. Okay, your time frame with your analysis is very important. Right now, if I were watching this, I wouldn't be entering a trade here just because the market isn't confirmed in either direction. Okay, if we break out here and we see this liquidity zone passed and we are still following this counter trend, then fantastic, there's a trade there. Okay, maybe up to the next liquidity zone, maybe up to 45,000. Just not the greatest trade in the world, but it is nonetheless a trade still. Okay, once we get to this liquidity zone, then I might exit my long and look for a potential short, depending on what my technical analysis at the time states. Okay, let's look even smaller now. Okay, let's look at an hour chart, and once again we've got to take what we see with a large pinch of salt on this time frame because it is very unreliable. So we've had a test, a fail of that test to break higher, then we've had a retest, a breakthrough, a nice good $1,000 movement. Okay, then we faltered and hit under this liquidity zone again. Look how nicely that price action is respecting this liquidity zone. We are now at the liquidity zone line, okay, and testing it once more. Okay, but we don't really have far to fall. Okay, so within the next 24 hours or so, maybe 36 hours, we shall actually see which side wins. Does this red line continue? Okay, or does the liquidity zone ultimately have too many people selling, failure to break through, and then we start our collapse? Okay, personally, I think we're going to see this break, and we're going to see a continuation of this bullish trend that we have now, just because of the previous price action has been so dramatic. Okay, we have quite a long way to recover back to where people are feeling enthusiastic about the market again, and I think that there is going to be a small relief rally, which we've currently just started, that is going to take us up to the mid 40s, maybe even at extremes the $50,000 region. Again, that doesn't necessarily mean that we're going to see a new all-time high for Bitcoin anytime soon, but what it does mean is that we have a trade that if you're long at the moment, you can continue to be long successfully. I wouldn't trade this on margin, which is the topic of the next video. However, I would be cautiously optimistic and setting a trailing stop behind this to make sure that if the market does suddenly capitulate and fall through, I would at least capture some of the profits that have been generated in the last 24, 48, 72 hours. So it's all about corroboration. It's all about understanding what's going on in the market and what is actually happening to the price action at the moment. Now, there are chart patterns as well that you can actually spot, and these are, again, an art rather than a science. This is a classic head and shoulders pattern. Okay, now this generally signals the end of a descent or a incline. Okay, the end of a trend, if you like. Okay, and this is definitely a trend channel that we have been in. We can see the shoulder here. Okay, this is the shoulder. Okay, there's the head, and here is the other. Okay, this is known as an inverse head and shoulders technically. Okay, because it's bearish rather than bullish. Okay, if we look for a bullish one, let's have a look at previous price action to see if we could use the head and shoulders analysis to spot what was going on there. Okay, let's just have a look here. Okay, there's a very slightly small one there, but it's not really relevant to what we're looking for. Okay, so yeah, shoulder, head, shoulder. Let me just have a look. It's not a textbook example, but you should get the indication. Okay, shoulder, which happens for about 6 hours or so. Then we have the head, then we have the shoulder. Okay, all right. So if you'd been watching this carefully, you could have seen that, seen the higher high, seen the sell-off and the recovery back to this liquidity zone, and thought, I know that it's intersected with a trend line which is showing resistance. Let's take some profits off the table here. And you would have been extremely right to, because over the corresponding days and weeks, we saw a dramatic decline in the price. So that is support and resistance. Remember, they are dynamic, they change constantly, and they are also changing in power. The more taps of a trend line, the more powerful they are. Okay, so the more taps of a trend line bullish, the stronger the ascent. The more taps of a trend line bearish, the stronger the descent. Okay, we've got our 3 taps here, 1, 2, 3. Okay, so that's just formulating a bullish trend, whereas the bearish trend is a lot more powerful here. Okay, so I think overall the bearish trend will continue, but this is a small relief rally which is going to take us up here. Okay, and if I were to analyze it again in terms of Elliott wave from this one perspective, let's do that. 1, 2, 3, and this I believe is wave 4 or 5, like I said on the macro counts. Okay, but you can obviously zoom in on different time frames and see different elements. For example, this is 1, this is 2, but wave 3 is comprised of 5 waves in and of itself. So let's go 1, 2, 3, 4, 5. Okay, and then this is going to be probably a 1, 2, and then we should see a wave 1, 2, and then a 3 of 3. That again supports my hypothesis that we are going to see a relief rally where this liquidity zone is not bearish, is actually broken, and we start to climb to test this other liquidity zone in time. But time will tell. Okay, and the better and the more accurate you are with your hypothesis generation, and the more able you are able to see alternative perspectives, the more accurate you will be and the better your trading will be as a result. Okay, if I wake up tomorrow morning and suddenly the price is towards the $33 region, $33,000 region, then I obviously know that that my analysis is now needing to change because we have failed at this liquidity zone. Okay, you'll notice also that prices tend to hover at liquidity zones for quite a long time, and it can be quite frustrating if you're trading, especially on margin, and it can be quite expensive if you're trading on margin if the price isn't doing anything. Okay, so just watch out for that. Okay, if the price isn't doing anything, then you just need to wait, then wait. Okay, trading is not a race, it is a marathon, it is not a sprint. Okay, if you need to wait for more confirmation from the technical analysis, just wait it out and see what happens. Let the chart and the market come to you rather than you forcing your interpretation of what you want to happen on the market. Naturally, anyone who's hodling here is going to want the price to break out to 45,000 Don't let that cloud your judgment, okay? Remember, if this does drop down here when you've got capital out of the market at the moment, you're going to get a much better buy than if the price goes to 45, okay? So be adaptable to any situation that may happen and take advantage of it. Ideally, you won't be fully exposed here, okay? This is not the movement to be fully exposed in, okay? But if it does drop, then that's a different story, you know? If it's suddenly at $25,000 tomorrow, then you can dollar cost average significantly more into this position because you know the price is definitely worth it. Buying here is kind of a little bit like the horse is already bolted. Maybe if you bought here, but again, you didn't really have this confirmation of a trend to actually go by, okay? So rather than just punting and just buying whenever the price dips, okay, wait for the establishment of a trend line, wait for the establishment of a trend channel, okay, before you generate your hypothesis enough to actually place money in the market.